So having said, okay, I'm recording this for the purposes of those who may be working or just unable to, to come to the class today, or if you have an emergency, then I would make sure that actually you get a recording for the class. Okay. So having said that, I want you to know that it is not necessary to have your videos on. We will just be very boring. We will actually be focusing on what we talk about. Okay, so to save your bundles, just use the audio alone. It's not necessary to have the video on. There might be some time when we might have the videos on, but in general, we will not have the video on. Okay. So having said that, I think we have a quorum. I think we have about 7 people, and we were expecting about 10. So some are still just strolling in. But like I said, I will assume that we were supposed to start at 7 o'clock. Hence, we are starting. All right. Welcome to Forex. As we continue with this class, okay, I will just bring you to speed as to what people normally talk about. Okay. So typically, people ask many questions. Is Forex trading a scam? Is it betting? Well, I can go on and on and on and on and explain to you, but the answer is no. Forex trading is not a scam. It is licensed, not authorized by the government, okay? Authorized by the international community. It is a legitimate business. Now, then why does it appear a lot in scams and all that stuff? Well, it's because some people are taking advantage of people's ignorance, hence using it as a scam. But Forex trading is not a scam. It is a legitimate business. Okay. Now, if somebody tells you, can you give me money so that I trade for you? Well, I would tell you right now, unless they are expert traders, you do not want to give your money to anybody. Essentially, you are not supposed to give anybody money to trade for you. However, when you become an expert and you get a license, then yes, you can trade for other people. Okay. So is it betting? No. Why? Because it has its own rules. It has its own rules. And if you abide by the rules, okay, you will either make money or you lose money. You make or you lose if you abide by the rules. All right. So it is not a scam and it is not betting. So then what is Forex trading? What is it not? Well, Forex trading is from the word Forex. Okay. It is actually the buying and selling of foreign currency. That's all. So what does it mean? It means that, oh, wait, let me see. Yeah, okay. It means the people who are still waiting here. Okay, that's fine. So it means that, okay, foreign exchange. It means if you want to travel to a foreign country, assume you're actually in Kenya or you're in another country and you want to travel, chances are you will have to go to a Forex bureau, to a bureau to exchange the money. Okay. In fact, we can just right here, if you want to go to Tanzania or Uganda or Malawi, wherever, you have to change your Kenya shillings to whichever country's, currency that you need. That exchange, the process of exchanging money, foreign money, local money to foreign money, or foreign money to local money, that in itself is Forex. It is Forex because you're exchanging currencies. And it is said that when you go online, you can still do the same thing, okay? You can still do the same thing. You can exchange your foreign money online. And that is where we are coming in, okay? So there's financial markets. Financial markets are just markets that operate online and allow you to go into that market and buy or sell foreign currency. That's it. So if somebody ever tells you, okay, so what is foreign exchange? Foreign exchange is nothing but the buying and selling of foreign currency. If you want to travel today, maybe to the UK or the US or somewhere, you will have to exchange, or you'll have to buy foreign currency. And buying foreign currency means going to the brokers or something and actually exchanging your currency, okay, with that other country's currency. So, okay, some people are still coming in almost 10 minutes later. That is not good. All right, so as we were saying, we are still talking about the foreign exchange. So a classic example would be, let's say you want to go to the US, okay? And you go to the embassy, they give you a visa. You can't walk with Kenya shillings to the plane. No, you can't. You'd have to change your Kenya shillings to the currency of your country destination, wherever you're going, yeah? So let me see. Okay. So people are still coming in now, sorry. And they keep interfering with my flow of thoughts. Okay. So we're still talking about foreign exchange and how we exchange that currency. So we now know what Forex is. The question is, how do we make money? How do we make money? Okay. I'm trying to get my original pen here and I'm having a bit of a problem. So how do we make money in Forex? Just 1 second. Okay, I think I've lost my pen here. Lost my pen. Okay, found it. Okay, can you guys see the whiteboard? Okay, I'm assuming you can. All right.
Yes.
Okay, good. Thank you. So the example I was trying to give you is if you want to go to America or the UK or somewhere outside of Africa, chances are by the time you go to the airport, you'll have gone and you'll have exchanged your money. Okay. So if today, for example, today, $1, okay, $1 is about 100 and again, for argument's sake, let's just say it's 150 Kenyan shillings. Yeah, I think it's about 110, but for our discussion here, let's use 150, which means that if you are going to change $1,000, you'll actually have to come up with 150,000 Kenya shillings. Okay, which is simple, straightforward. Now, the big question people normally ask is, so then how do people make money? What really makes this thing to change? Now, let's pretend that you leave Kenya today. Today is December 6th. You leave Kenya and you go to the UK or Dubai or somewhere, and you decide you want to stay there for maybe 8 months. And you want to come back after elections. All right. You want to come back after elections. It means that for 8 months, you'll be staying in Dubai or wherever you're going to go. And then you come back after 8 months. Well, by the time you come back, let's pretend things become very bad in Kenya and elections are chaotic, blah, 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 and everybody is jittery about the economy in Kenya. What will happen? What will happen is our, economy will get bad, which means that whereas before $1 was 150 shillings, you'll find that now you need more money to even get a dollar. People will be hesitant. People will be scared of having Kenyan shillings, so they'll get rid of it. So you'll find that getting a dollar, you're probably going to pay 200 bob for $1, which means that when you come back after 8 months, even though you haven't done anything, even though you just went and stayed away and came back, okay, if you didn't do anything with your $1,000, if you go to change it back, guess what? How much they'll give you? They'll give you 200,000. Well, but initially you only paid 150,000. That is true. But the economy in Kenya was messed up during the time. And so your money has increased. Okay. Why? Because of the weakening of the Kenya shilling. So every time you talk about Forex, you'll hear about weakening of currencies, okay, some pairs becoming stronger, and so on and so on and so on. So here, you seem to be able, or you will have made some money. You'll have made like 50,000 from doing nothing, just because you were away for 8 months. And now that you're back, you went back to exchange your money, and you're getting 200,000. Why? Because the Kenyan shilling has weakened. So in Forex, some currencies weaken and others become stronger. It is that weakening and becoming strong that makes a business out of the exchange of Forex. So what am I saying? What I'm saying is the Forex bureaus have realized that in this exchange, back and forth, back and forth, back and forth, they can make money. Yeah. Today, the shilling, well, the dollar is maybe 110, and tomorrow you'll find that it is 113 Kenya shillings. Well, if you had kept that 110 today, tomorrow you'll have gotten 113. Now you might say, but that's very little money. That's only 3 bob. Yeah, it's 3 bob. That's true. But if you had a million and you exchange suddenly to 103. Okay, if you had 1,000,000 Kenyan shillings, and suddenly the value, let me just say, which is better, I think the dollars may sound sweeter. Yes, if you had $1,000,000 in Kenya shillings, that's 110 million. But if that value changes the following day, then you'll have not 110 million, you'll have 113 million shillings. So in one day, you'll have made 3 million shillings. Now you see how big the money is. Okay. So in general, what I'm saying is this exchange of currencies is what causes the market be the market. Hence, countries are busy making, not making money, requiring each other's currencies to trade. So for example, traders in Kenya, they want to buy shoes and everything from China. Okay. Well, they can't use Kenyan shillings to buy their goods from China. They have to convert Kenyan shillings, okay, more often to dollar, and then from dollar to the Chinese, I think it's called Mimble or something. Okay. So in that exchange from Kenya shillings to dollar, and then from dollar to Mimble, somebody's making some money somewhere. Somebody's making some money somewhere. Okay. But you, the person down here, if this thing was quoted for maybe I don't know, the exchange with Mimble, but I know that by the time the money comes into dollars and then to Kenyan shillings, you definitely have paid a lot of overheads. Okay, so because of that, the international community came up with what we call an exchange. An exchange, like central bank. Okay, so this exchange was formed to allow people like you and me, business people, well, even companies, countries, to be able to exchange money without a lot of difficulties, okay? So that this exchange would allow anybody, anywhere in the world to exchange money, okay? And the reason for that was to allow especially countries and then businesses, international businesses, companies, individuals. Okay? So if you're traveling or you need to do business from one country to another country, from dollars to euros to maybe pounds to Japanese yen, all these are now allowed in the system. Okay, in the system. So you put them in the system and out you get whatever currency you want. So if you have to look at two currencies, let's say, let's forget about the Kenyan currency for now. Let's look at the dollar and the euro. Okay. So between Europe and the US, the businesses that are doing business between one country and the next country, they have to exchange their currencies. So normally what they do is they have one currency being the base, okay, and the other currency being the quoted currency. In other words, if I say $1 equals, or €1 equals 1.235. It means that maybe €1 if we're using euros, 1 euro is equals to this many dollars. Okay, this then is called the base currency, and this is called the quote currency. Do we need to memorize this? No, but I just want you to know that often something like that, if somebody says euro USD, what they mean or what they're saying is the euro is the base currency and the USD is the quote currency. So normally we ignore that one over there and we just read this one here. Okay, yes, we know it means 1 euro is equal to that. So you'll find them writing this euro USD will be equal to 1.2354. Do we need to memorize this? No, we don't. Why? Because I'm just sharing, I'm just letting you know that that's how it is called. So we say the euro USD dollar, a pair is quoted like that. All right, it is written like that. So you'll find that Japanese, maybe USD, Japanese yen, this one, because of the exchange between the USD and the Japanese, here in this case, the USD is the base currency, okay, is the base currency, and this is the quote currency. So you'll find that maybe the value is 111 point maybe 714 now, okay, something like that. So you'll find that there are very many pairs, okay, and I call them pairs now because that's how they are written down. Okay? We normally write them in pairs. We relate money in pairs. So if you want to trade money, international currency, you have to understand that you have to pick a pair that maybe moves a lot or will give you a lot of movement in the market. Hence, we use these things. Okay? And whereas you don't need to know mathematics, you don't need to know mathematics for this. Basically, what this is, it is a ratio of the euro to the US dollar. This is a ratio of US dollar to Japanese yen. Do we need to know that? No, we don't. All right, so what do we need to know? What we need to know is simple. It's much, much simpler than that. Let me erase this. So what we need to know is actually how we make money in the market. So that introduction was just to give you an overview, but essentially what we need to know is just how the market moves and how we make money. So how do we make money? Well, whenever we talk about money in the financial markets, we normally think of a graph, where a graph has an X and Y axis. Okay, but I'm drawing it in the opposite. So this is the Y axis, and this is the X axis. So in the Forex market, the X axis represents time. Very easy to remember. Okay, do you need to remember it? Actually, no, because the platforms have these things written down. And the Y-axis is the money. So I gave you an example of maybe euro US dollar. So euro USD. So assuming that currently euro USD is at 1.354, maybe 1. Normally they give it like in 4 digits. and that should not scare you because it's just a number, okay? And we say last week, no, the whole week, let's say this was Monday, Tuesday, Wednesday, Thursday, Friday, and then we have the weekend, and then we have Monday. Okay, and this is now we're going towards the end of Monday. Okay, so you find that maybe on Monday, last week, the pair was actually low. Maybe it was 1.350, maybe 5 or something. And then those are now higher values and so on. So you'll find that maybe last week early it was there, and then it went up a little bit on Tuesday, then Wednesday, then it came down. Remember those graphs you did in, no, is it primary or secondary? Oh, I can't remember. Okay, so something like that. And then today, it's probably higher there. So you can actually almost draw lines. You can say, okay, it was there again, it went up there, it went down, it went up, down, down. So this is market, the Forex market. Another pair could be something else, and it goes maybe like that, it goes down instead, goes up, down, and so on and so on. So when you look at a graph, anything on this side is time. This is like the farthest time possible, and this is now. Okay. Do we need to know this? I guess you don't. Why? Because the market, when I show you the charts, it'll all make sense. Right now, I'm just giving the background information. And then this increment from maybe down there increases like that. Okay. Do we need to know this? Like I said again, not yet. Okay. So before we end the class today, I want to go into a chart, like a live chart, to show you what this hoopla is all about. Let me see if I can finish this. So that was just a little background of Forex, which it's okay to know, but our course will actually start getting exciting when we start getting to the real charts, which I'm going to show you just now. Okay, I'm going to show you. Okay, this is an example of a particular chart right now, currently. Okay, if you look at this is called a cursor, of course, a cursor from the computer background. So this is December 6th. Okay, this is actually not even current. Let me see if I can move it to current time, to real time. So it will move to real time. Okay, now we're at real time. There we go. I can make them bigger fast. Okay, so if I put my line there, you see it's saying 20 hours. Okay, it's likely after 20 hours, after 8, okay? But we're in the 8 o'clock hour. And this is all indicating where the market has been. So, and on the right-hand side, as you can see, it is what I was telling you. It's all about time. No, not time, but currency, like the value of the currency. So here it's going up, it's going up, going up, going up, and so on and so on. Okay. Now, this pair I've taken is actually Australian dollar. The pair is Australian dollar, US dollar. And this is time from long time ago to now. This is now right here. Okay. So I will change something here to show you how it actually moves. So this is the 1 hour time frame, which means each of these things here has taken 1 hour to form. Do we have to memorize these things? No. So up to now, whatever I'm showing you, you don't have to memorize. You have to memorize nothing. Okay, I'm giving you just the background information. Okay. Okay, this doesn't give us, no, it doesn't give seconds. 1 minute, let me see, 1 minute. Okay. It gives 1 minute. So in the 1 minute chart, these things form every 1 minute, and you should see them moving. So this is where the market is right now. But if you look at this one here, you'll see it moving in the next 1 minute. Okay, we just wait and see. Okay. After the 1 minute, it will move. Okay. Oops. It looks like we're almost out of time. So I will ask you to log in again. I will log out and I will allow you guys to log in one more time so we can finish this example. This is an introductory class for today. So whatever I'm doing, you don't have to really memorize. It was just for you to have an idea of what Forex is, okay? Before we start getting very, very